The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 3rd, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I do want you to know that I'm absolutely grateful for your presence here. But more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered. You can send me an email. Send it to steve@tfnn.com. Inside the subject heading, please put radio show question in our Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow 55 points, trading at 26,134. All the indices in the green, with the exception of the Russell 2000, which is flat or down just slightly off 33 pennies out there. The spot volatility index is down about 5% or $1, traded at 1954, still well above its 50-day exponential moving average. We'll take a look at that. Gold's up $7, silver's up 2 pennies. Light sweet crude back 71 cents, trading out about $52, 51.93 to be exact. KTX is a leader dollar-wise. The upside, that is market taxes holding up $16 and change or 5%. Mettler Toledo up 2%, $13. Google's up 10. Equinix is up 8. To the downside, it's Tesla, $14. I'm rounding. It's down nearly 6%. Constellation Brands, STZ, off $11, down about 5.5%. Alta Beauty down 10 or nearly 4%. So certainly things to look at. But we're going to look at what you want to look at as long as we can. So the first request that has come in is from Sat. And Sat writes in and says, I want to buy a few shares of LABU. Please let me know if the bottom is in place for LABU, and is this a good time to buy? Well, let's go take a look at that. So let's do it like we do for each of, most of the instruments we take a look at. And here, what I wish I did have and I don't have is the actual symbol for the S&P Biotech, because LABU is a direction share, a 3X, and sometimes the signals on a triple are going to be different than the single or the index out here. I don't know what that is. I can't use it. We're going to have to go with LABU. That's the daily S&P Biotech bull, 3X out there. So here's what we know. Prices are trading below the daily, weekly, and monthly profile. So may not look good, except that Sat asked the right question. Please let me know if the bottom is in, because we want to be able to figure out, try to identify bottoms out there, tops and bottoms. What a beautiful thing. If we take a look at LABU, we're going to use one of our tools. We're going to use our chart that has several of our tools on it. One of the tools that helps us to identify a potential bottom is bar number 8, 9, or the bar following 9 of a TD setup 9 count. Just turns out that LABU made count number 9 yesterday. It is now a valid active pattern. If you're asking me, Sat P, has LABU generated a bottom signal? Then there you go. Your answer is yes. Now, the next questions are, where is resistance? So the first level of resistance is going to be Stevie's red line. You're trading at 30.92. 32.09 is going to be your first level of resistance. So if you take that trade, you say you want to buy a few shares, I say go for it. Make sure you have a stop. Make sure you have a stop out there. With regard to your stop, wherever your entry point is, you've got to make sure that your stop is $2.81 And I would say times 1.618, whatever that is. I'm just going to say for my purposes, it's $4. I don't know that it's $4. It's probably $4.50 or something like that. But it should be $4.50, whatever that number is, below your entry price. Now, hopefully, it's actually below the low of the session from October 2nd out there. But that's just using the average true range. The average true range is 281. We multiply times the Fibonacci expansion because none of us out here are average. We're all above average. If we do something average, what kind of results do you think we're going to get? I know on air we really can't say. We could. It could begin with an S. It could end with a chitty chitty bang bang, or rhyme with, I suppose, that. We don't do average out here. If you are trading and you put your stop that is so tight, which means somewhere with inside just the average, this is just the 10-day average true range out there, you're saying that you know where the market is going. And if you do, please, I will order one of those crystal balls. Really, I would love that. It would make my life so much easier. In lieu of that out here, let's just use normal, reasonable, proper position sizing out there, and that includes our stop. Now, the second level, if in fact price can clear Stevie's red line at 32.10, then what you're looking for is a move up to 34.85, the bottom of that box. I don't know if there's a new profile that's going to form or not, but that is your next resistance level. Doesn't mean that resistance can't be overcome. It's just you need to anticipate where are those resistance levels at, because you want to see them fall by the wayside if you're taking a long position. So SOT, the answer is yeah. Yesterday, LABU formed a TD setup 9 count, and that can be used as a bottoming signal out there. All righty, let's go to our next question. Looks like this is coming in from Phil. And Phil, I didn't see your first question on my phone, but it says, I meant FCG. So I'm going to assume you're asking me to take a look at FCG. I'll read the full message after the show out here. That is First Trust Natural Gas. Okay, so FCG. I'm going to assume that this equity kind of follows or tracks natural gas out there. It's just a guess. I don't know which contract is in there. So that would be important for you to take a look at, Phil. What contract is in FCG? If in fact it is just simply a natural gas ETF, which that's what the description says. So the question is. I don't know what the question was, but let's just simply go take a look at FCG and see what it has or hasn't done. Using so the same tools, what do we know? Trade below the daily, trade below the weekly, trade below the monthly, bottom of its box. That says you're trading below support out there. Now, the weekly support level is $10.93. You're at $10.76. Hey, a trade below, a close below says you're below support out there. But the question is really, has this bottomed? And since I know that Phil is a connoisseur of the TD setup 9 count pattern, or is becoming a connoisseur of it, well, yesterday was bar number 9. Today is bar number 10 out here. And so in this case here, now here's the good news and the bad news. So the good news is this has a potential bottoming pattern. The bad news is you didn't want to see it close below the breakout level. The breakout level on this equity on a daily basis was 1073. That is where the most recent TD setup 9 count to the upside began, and prices I take that back. Price is now trading above 1073. You're 1077. I like that. That says support is held out here. If you're looking to enter a long trade, yeah, now may be the time. Look, there could be a lower low tomorrow, but support, that's key. 1073. You want to see it close above that at the end of the day's trading session. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 43, S&P 13. Let's go out to Brent in Martinez, California. Brent, thanks for calling. Thanks for holding. How are you doing this morning?
I'm doing quite well, Steve. How about you?
Very good. Thanks for asking. And we're going to take a look at natural gas, the actual November contract out here, trading out at $2.28. So tell me how I can assist you.
Just kind of revisiting what we had talked about before. We've, progressed, I guess, along to where we should have that 9 count. And then of course, we'd need to see what today's close is, and then would like to see some follow through tomorrow, of course. But I just wanted to see where you're at with the count and just what your thoughts are on it.
Sure. So here's what we know when we take a look at the daily time frame. We'll do it on 2 different charts out here, folks. And the first chart you're looking at has both the daily and the weekly set of profiles for the November natural gas contract. We know that price this morning pushed down towards support. Support would have been $2.18. The low so far, $2.20. We know that the weekly profile is bullish in structure. Bullish in structure meaning that support level should hold of $2.18. Bullish in structure because the center, where both buyers and sellers are, is closer to the bottom of the profile out there. So it appears, Brent, that even though it didn't get it right exactly, that price is pushed down to support that has held. If we take a look at the natural gas contract with the white background, where I have all these other tools, yesterday's low would have been the low for the TD setup 9 count. That low should occur on bars 8, 9, or the bar following 9. And what we saw take place this morning was a lower low. So at this stage, until I have this entire scenario programmed, it doesn't invalidate the count, but what it does is it invalidates the bottom signal out here. Now, when I do get my software built, I'm hoping to be able to test, can we use the low of bar 10, so to speak, or the low of any of either 8, 9, or 10, or the high for a top out there? Can we just use that low as a level of support? But I don't have that statistic right now. I can tell you that at this stage of the game, the pattern that we were looking for came and went. we also know that the breakout level on this is $2.16. So you've got a weekly profile that is at $2.18. You've got a daily breakout area at $2.16. It's possible that price might get down there. Now, how are we going to know or not? Well, at 1:21 in the afternoon, all that Brent and I can use would be short-term signals out here. Now, on its 30-minute chart, we've seen quite a spike to the downside, then back to the upside on the 30-minute time frame chart. That's in our left-hand panel. But if we take a look at the 2-hour time frame, the 5-hour time frame, we're not going to see any closes above any kind of resistance levels. It would be $2.30 on the 5-hour time frame. That would be the top of its daily box. So that would be one area for us to look at. If there was a close above that, and it's a profile that formed within the past 10 hours, then that would suggest that we've seen a level of resistance fail out here. On the 30-minute time frame, and the reason why I'm not using that is because on the 30-minute time frame, if natural gas has really put in a solid bottom and it's broken to the upside, we should see resistance levels fail. Well, on the 30-minute time frame, the only resistance level that I have is $2.32. That was the last time there was a TD setup 9 count to the downside out here, and we can see that that level was tested and it held really as resistance. Yes, one candle closed and a candle closed below, then one above, then back below. So I'm going to say that 232 is a real key level of resistance out here. And so it just takes the prior call where it was for Phil, we were looking at an ETF that did show a 9-count pattern. The actual contract itself does not out here. And I would say in order to be a more solid bottom, we really need to see resistance fail. Now, you know, maybe that flies in the ointment of trying to buy at a better price because price is trading lower right now. But I just don't have the signal. Whether it's a 30-minute, let's go look at a 15-minute. We can change the time frame on this and look for, you know, so on a 15-minute basis, it says, well, okay, maybe. $2.28 would have been the price level. So now we're really getting down to a shorter time frame. But the 15-minute does have a valid pattern that says that price is above it. So there's the info. Help me regurgitate. Help me digest it. What are you thinking?
Oh, I think what you're providing us is great. I think a little patience might be in order, just to see how this, plays out. I think that 232 level sounds like it's has some importance, and if we can get above that, then see how it handles that. And if it fails there, maybe it does test that lower level you're talking about. So, yeah, I don't think there's any need to rush in at this moment. I just wanted to get some idea where you're at with your counts and what you just provided is, that's very helpful.
Okay, yeah. So and folks, one of the reasons that we're looking for it, let me see if I can put this up on the screen here right now, is because what Brent has noticed is that the monthly time frame out here, if I can get this to populate quick enough, I don't know if it will, is the monthly chart for natural gas is put in. We'll see if it populates. I'll just tell you what it does. If it populates, great. It's put in a nice TD setup 9-count bottom pattern. And the last time that we saw that on a monthly basis was at a significant low. It was back in 2016. It was March of 2016. We now have that same pattern that's in play. And that same pattern that's in play suggests that we should see a move up to at least $3.72 over the longer haul. And so as Brent is saying, we've got some time to wait on that. So that's what I would be waiting for. We're waiting for some resistance levels to fail, and I like that 30-minute resistance area. So patience it is.
All right. Thank you very much, Steve. As always, analysis is great, and just really appreciate your help.
My pleasure.
Have a great day, and I'll talk to you soon.
You bet. You bet. That was Brent in Martinez, California. Always good to hear Brent's voice. Of course, good to hear your voice as well. Boy, we got a lot of natural gassers out here. This one coming in from a cell phone. Did I miss the boat on natural gas? Well, we have answered that question there. Nope, you have not missed the boat. Not according to Stevie's systems out here, and not according to Brent. We'll go with that. That's a good second to motion out there. So no, I don't think you have missed the boat, so to speak. And because of the monthly time frame chart and the possibility that we're looking at a long-term bottom out here, that boat should be traveling for quite a long period of time if, in fact, this is a significant bottom. So I don't see any other questions, none inside the Tiger's Den, none anywhere. So let's continue on. But hey, what are the markets doing? Let's go take a look at the question here. What are the markets doing? So the levels to be watching today, we gave you those levels yesterday. We're going to give you those levels again this morning. And this is the importance of support holding. If we take a look at the ES Mini, the NQ, the YM, and the Russell 2000, what do we know? We know that what has occurred thus far today is a test of support. The support level inside the ES Mini is 28.7525. As long as price closes above that, support will have been tested and held. What does that say? That says that you could see the ES Mini trade up to 29.60, 60, about 58 points higher than where we're at right now. That would be a normal move in any move. Certainly a normal counter trend move would take you to 29.60. The NQ has held support, 75.6950. 25,919 in the YM and 1465.20 in the Russell 2000. You know the expression, if you can't bust them down, you're going to go try to bust them up. That is the signal we have at 1:26 in the afternoon. But look for the close today to confirm this. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White has had some great trades in his daily trading newsletter, The Path of Least Resistance, and now's a great time to sign up while saving 25%. Just use promo code OPTIONS at checkout and you can save 25% off your first month. And this offer still comes with a 30-day money-back guarantee, so you have nothing to risk. Dave has had some great options and equity winners over the last couple of months. If you'd like to see for yourself the types of option trades he recommends for his subscribers, then check out all the details on the front page of TFNN.com. This offer only runs for 1 week and ends this Sunday, October 6th, so don't miss out. Head on over to the front page of TFNN.com right now for all the details and to start your 30-day money-back guarantee subscription to the Path of Least Resistance today. Remember to use promo code OPTIONS at checkout. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back back, folks. Dow's up 49, S&P is 14. And so we were taking a look at the daily breakout levels for the equity futures contracts. The NQ, I'm going to focus here on the NQ just for a moment. And if we take a look at the 30-minute time frame chart here for the NQ, made the classic Rhodes momentum indicator bottom on that spike lower this morning. Now, it was the close of that candle session that was the clincher, that was the key. It formed a nice big old hammer candle. That was at the bar at 10:30 out there. Now, in hammer candles, you like to buy hammer candles somewhere in the middle of the wick if you can. And during that next trading session, you saw price get down towards that level out there. Now, the question should be, are we likely to see a change in trend signal out here, or are we just seeing a little bit of a relief rally? And the answer, my friend, is blowing in the wind. No, it's coming from the price level of 76.55.50. So Brent and I, right, you and I, all of us, we were taking a look at the natural gas contract out there, and then we said, okay, how are we going to know if there's some kind of change in trend signal out here? And what we were looking for is, if there's going to be a change in trend, you're always going to see resistance levels fail. Think of our chart here as nothing more than we're in the war room. You and I are in the war room right here. This is our virtual war room. Now look, the NQ 30-minute made a nice top of the Rhodes momentum indicator. Maybe it's made the bottom with the Rhodes momentum indicator signal out there. Well, these lines out here, whether they're market profiles, those are levels of support and resistance. By the way, price blew through that level of resistance out there. So there's one check box out here. The next level is where price most recently broke down. We're likely going to see that transpire over the course of the next couple hours. And if there is a close above 76.55.50, then it signals the chance that there is a change in trend. Now, I know you don't want me to put the word the chance. I can't control the market. And let me just say, it's a pretty darn good reason to take action, Jackson, out there, because it's now telling you that levels of resistance are failing. The bullish army is overcoming the front lines of the bearish army, so to speak. The next level above that on the 30-minute base will be 77.15 out there. So I think with regard to the general markets, what you want to be watching for is 76.55.50. If the NQ can close above it, and it's the 30-minute chart for the NQ that really generated the nice bottoming signal. So I would put all of my eggs in that basket, so to speak. What does that mean? Just means let's focus on the NQ. If you get that signal there, that there's a close above resistance, you've got a pretty darn good change in trend signal out there. What happens if it just tests that area and rejects it? Well, then you don't have a change in trend signal. And what you just had was a bit of a counter-trend rally, at least at the moment. Similar to how we would look at any instrument or certainly any futures contract out there. Now, what else do we look at out here? Well, in the importance of these lines, let's take, for example, let's say that you're a person that's been invested in one of those volatility index trades out there, and you were trading the spot volatility index to the upside. We looked at this yesterday, and what we looked at was where was its breakdown resistance level, 21.15. Can you imagine we have these charts and we don't have these tools on here? What would we pick out? What would we pick out for support and resistance? Now, look, I know what we would do. We'd go take a look at swing points or bullish and bearish reversal candles and so forth. But look, we do have this tool out here. We do know where price broke down. We do know that the spot volatility got up there and was turned back down yesterday. And it has done the same thing this morning. So what is it that we're looking at? We are definitely looking at the spot volatility index pulling back towards its green line. It was red yesterday on the spot volatility index. It's turned green out here. Not green with envy, just green in color. And what we know is that when that occurs, there's the phenomena that price and that line will catch up to each other. It can be a combination of the line moving higher, price moving sideways, it can, any combination. But the real key test is going to be what happens when that test occurs, and it will occur. Is it a test and rejection, meaning price tests it and then bounces off of it? Well, if so, that would be a bullish sign for the spot volatility index, a bearish sign for the S&P 500. I still would have to say that the spot volatility index has to clear 21.15. But what you want to see, bulls or bears, you want to see how that test unfolds. But if you're in the long trade in the spot volatility index out there, one of those ETFs, ETNs, whatever it might be, you may want to consider taking those profits and bagging them now, pronto, right away. No, you do it whenever it makes sense, at least going ahead and adjusting your stop, because what is likely to unfold here is price has not been able to take out resistance. It's been stopped twice. Maybe the third time is the charm out there. I don't know. But at this stage here, what we're taking a look at, let's just say this. Let's put it together like this. If the NQ closed above the level that we looked at out there, boy, that would really be telling you to exit that trade, or to most certainly tighten the stop, and to anticipate that the spot volatility index and Stevie's green line are going to kiss and tell. And we want to know what that tell is, because that will tell us more information about what the intent of the markets is. So there's your spot volatility index. Jay wants to know if there are any new TAS market profiles. And the answer is there are not. Here is, I believe, the quad that you were looking at, and the quad being the ES, the NQ, the Dow, and the Russell 2000. No new futures, no new profiles, daily, weekly, or the otherwise. Out here, this says, hey, BS Mini, no problem. It could easily bounce to 2940. Inside the NQ, 7715 is on board, 26273. Inside of the Dow, and the Russell is way up there. 1538 is the number. Peter asks, so there is your profiles, if you can, on the 60 minutes. So the 60 minute, okay. Let's do this. Let's come over here. Nope, let's come over here. Let's put the NQ. Let's put the December contract. Let's change it from 30 to 60 out here. You were looking for the profiles on the 60-minute. I think you're looking for all four. Here's the 60-minute. 7608 is the number. Prices above that in the NQ. Let me change this here to the ES. Just remind me to switch back to the NQ when we're done with this. The 60-minute profile in the ES was 2892. Prices above that. Inside of the Dow, the number is for the YM. Drum roll, please. Price is trading right into it right now. 26,089 is that level. And to finish this round out, we're going to go take a look at the Russell 2000 60-minute set of profiles. The top of its box, 1485.78. So you got two against and two for it. I mean, two above, two below. Those are your market profiles. I believe this was the NQ. Let me get that back here, and we'll close up that chart. And there are your 60-minute TAS market profiles for your four equity futures contracts out there. As I say, folks, this hour is for you. It is all about you. I'm here to serve you. You want to know what something is? I'll put up the chart. We'll do the best we can to analyze it, assist you with what the chart is communicating to you and I, and we'll just simply go from there. Now, Peter wants to take a look at gold. If we take a look at Goldilocks out here, what do we know about gold? So let's go put gold. Let's put the synthetic contract up just for the heck of it. As we take a look at Goldilocks going into this hard breakout here, what do we know? We know that there's a new TAS daily profile, and it is equally distributed. The bottom where support is 1472, the top is 1535, and the center is 1504. But you know what? That doesn't really tell you the story. So as Paul Harvey used to say, what was it that Paul Harvey used to say? Whatever he used to say, that's what I would say. But come on back from the break. We'll take a look at gold.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. We're taking a look at the gold contract, currently trading out at 15.12.20, trading in between its daily market profiles out there between 14.72 and 15.35, support and resistance. But here's the other thing we know about gold. We know that at this stage here, all that gold has done is made a counter trend rally. And a counter trend rally to where? Stevie's green line, 15.16.80. Now, that price is going to change by pennies, quarters, or so forth as price moves up and down. So use 15.17 as an example. And it's all about the close. It's not about the emotional intraday upper-lower shadows or upper-lower wicks out there. It's really about the body of the candle that is truly the essence of price. And what we know at this stage here is that gold has just simply made a counter-trend move. It's still got that Rhodes Momentum Indicator top. It did not make the Gartley buy pattern. Not according to the way that Stevie takes a look at a Gartley buy pattern, and the reason is, and a Gartley buy pattern has that has a to B equals CD to the downside. Price did hit the 1-to-1 level, which was 14.67, but no bullish reversal candle. And with no bull, I'm not going to give you any bull. So far, just a counter trend rally inside of Goldilocks. What would change that? Well, the only thing that could change that view is a close above resistance, which right now is 15.35 out there when we take a look at Goldilocks. Let me see if there's some other questions here. That and as Harvey would say, and now you know the rest of the story. So LB writes in and he says, I bought dust this morning on the spike in gold miners. Do you think this morning was the bottom in dust and a temporary top in GDX? Well, I don't know how it's going to trade. Here's what we know. We know that price has been a counter trend move, 15.16. You don't really want to see it close above 15.16.70. Let's call it 15.70 out there, Lee. If you do, it says you might feel more pressure on that trade. And you most certainly do not want to see it close above 15.35.50 out there. So that's what we know right now. Of course, you were asking about dust, D-U-S-T. Let's go put that up on our screen out there. And while that, we know that there's a brand new profile that is formed. So you've got another piece of information on dust, and that's at $7.32. So ideally, you won't see it close below the bottom of that profile. Resistance is at 8.23. So you've got that you can use. On a weekly basis, prices in between between its weekly profile. So the bottom is 703, the top is 892. And the monthly, and the triples out here, the monthly are basically worthless with regard to signals. But the GDX, different story out here. So let's take a look at the GDX, right? Because you even had mentioned the GDX, and your question is it a temporary top in the GDX? So in the GDX, which I would rather use, and you kind of thrown that out there, here's what we know. Here's what we know. 2774 is the level of resistance, the top of its brand new bullish bearish structured daily profile. Bearish in structure because the center line's at 2743. So Lee, I say you're in the trade. You had the reasons to take the trade. You stay in that trade, and you would consider exiting that trade on a close above 2774. The GDX has tested and rejected the bottom of its weekly profile, which is 2672. So eventually you're going to want to see that level get breached. Not breached, but a close below is really what I mean when we take a look at the GDX out there. So best of luck with that trade. I hope that this information here is helpful and useful to you. And then, so let's see. Phil writes in, hey, Steve, FCG was hilarious, below support and now above. Lots of laughs. Yeah. Hey, that's the way that it is. Somebody else is saying natural gas is starting to move. Bob. So watch me to take a look at. So a lot of natural gas out here. I like that classical gas song. So with regard to natural gas, what do we know? What do we know? Man, that's a big move. Okay, so what we really want to know, Bob, is are levels of resistance failing inside the short-term time frame charts out here? And, okay, so let me expand the line. It's just going to be easier to do that. Let me just expand these lines. Hopefully they don't, screw us up. There you go. So let me expand them just a tad more than that out here. So the first level of resistance is being tested right now. Now the bar that we're in, there's really two levels of resistance that we can see out here. The first breakdown area, folks, was $2.32, 2.326 to be exact. And the second level, not much further above it, is 2.342. And in essence, 2.342 was tested. Your bar number 7 of a potential TD setup 9-count pattern. We won't know that for an hour and a half or so. But you've got to see, Bob, with regard to UNG, well, again, you just got in this morning. And so what you really want to see is you want to see these short-term levels of resistance, these breakdown levels of resistance fail. They're kind of the early warning signals of a change in trend, which is what you and I and Brent and whoever else wrote in this morning. It is what we want to see. We want to see levels of resistance fail. So you've got the numbers. It's 1:48. The current candle session doesn't complete until 2 p.m. I'm off the air before 2 p.m. But watch 2.326, watch 2.342, and then the final level out here of resistance is 2.382. Now, typically all you need to see is one close above a resistance level, but all these are kind of, I'd say the first two, 2.342 and 2.326, because they're so close to each other, those would be the ones that I would be watching. And Bob A., if you get closes above that, then your trade in UNG looks good out there. And if you don't, then you don't. Then you don't have the clear signal. Doesn't mean it can't be a bottom. It just means you'd have a clear signal. Now, with regard to the 30-minute chart, you may get a TD setup 9-count. And if you do, you want to be able to watch that retracement out there. And hopefully that retracement is just simply create some type of higher low. Hopefully it's some type of retracement back to a 0.382 or 618 retracement level, something along those lines. So that's what we're looking at. We take a look at natural gas, the November contract out there. And so as a Gus in my big fat Greek wedding would say, and there you go. I'm about to sneeze, trying to hold it. I don't don't think about it or talk about it, maybe I can. Now, let's go take a look at the New York Stock Exchange. Oh, the VIX Spot Volatility Index, New York Stock Exchange, kind of the combo out there. So what do we know about the New York Stock Exchange? Well, we know that it was in that oversold area of minus 150. The reading yesterday was minus 176. We're now back above minus 150, 132. We know the Spot Volatility Index has turned down. We already covered that. So the question is, where does the counter trend rally take us to? If it's only a counter trend rally, well, we'd likely take the advanced decline oscillator reading up towards its zero level. Closes above the zero level for 2 days in a row, says that this was a bottom out there. If we come back and we take a look at the Spot Volatility Index, what do we know? We know that the reading between the Spot Volatility Index and its 3-month counterpart yesterday got up to that 1 level, where they both equal the same thing. And when that happens, that's where we can also see market bottoms. Nothing like a good bottom. Spot Volatility Index trading down $1.25, trading out at 1932. 50-day exponential moving average is 1658. That is probably the target on its downside move, right around the 1658 level. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. How about that Rays Oakland game last night? Boomers. Nice home runs out there, and it was a beautiful beautiful thing. I do love this time of the year, the baseball playoffs out there. Great. I just think it's great. During the year, I go to several games when I go up to D.C. and go catch the Nationals. It's actually, I see more games going to see the Nationals than I do driving down to Miami to see them play. But Stevie perseverance, and also Dusty Rhodes out there, right? As a kid, that was the nickname because played a lot of ball. Third base, was always in the dirt, always in the dust, so to speak. No relationship to the wrestler Dusty Rhodes. But I am not against a good wrestle here and there. Okay, so we got a minute. How are we going to close out the day for you? Look, to summarize things, here's the deal. Support has held thus far. And support being where price had broken out to. You can't bust them down. Price will go and bust them up. Bust them up in the ES is 2960. Inside the NQ is 7748. Inside the Dow is 26704. Inside the Russell is 1523 out there. Those are the areas where price is likely to bounce to. If it's just a counter trend rally, price will stop at Stevie's green line, just like we took a look at for the gold contract right now. If price gets above it, then it says it's got more legs and there's more rally left. How are you going to know if those levels are going to be hit? You're going to focus on the 30-minute time frame chart for the NQ, which, as we were on the air here, in essence got up to the 76, 55, 50 level. That's going to be bar number 6 of a TD setup, potential TD setup 9 count, but a close above 76, 55, 50, and staying above that level says you have more legs left inside this rally. I hope that helps you out. Folks, thanks so much for being here. Always a pleasure to be with you. I'll look forward to our next meeting, and that's going to be tomorrow on Fantastic Friday. But have a terrific Thursday. Until then, take care.